Hi guys, welcome to this recording. Now what I want you to do is please have a look at your lecture notes. This will be our group revision lecture notes. You will identify that there is 1, 2, 3, 4, 5, 6 pages. So what I want you to do is I want you to please take out your analysis of owner's equity page and keep this next to you. Now guys, why? You need to be able to identify the links between all of these different scenarios. I want us to think about the possible questions that they can ask us in an exam. The first thing that I think about will be financial statements. Remember, when they refer to financial statements, this can either be your statement of financial position, your profit and loss, your statement of changes in equity, or your cash flow statement on a CTA level. Then guys, important, you need to read and identify, is this your statement of financial position? If the answer is yes, my first step will be to include my template. Spend a few seconds and plan how you are going to approach the question to ensure that you understand the requirement. Remember, financial statements can either be 1, your group, or 2, your separate financial statements of your parent or your investor. Therefore, you need to read. The second type of questions, journals, extremely important guys. Again, this can either be your group journals or your separate journals of your parent or your investor or any of these other entities in the group. And then third, discussion questions. I promise you, on a CTA level, this is extremely important. Therefore, when you study, talk to yourself, explain to yourself debits, credits, and so forth. Explain to yourself the principles. Now guys, this is just a basic list. There can be other types of questions as well, multiple choice and so forth. Now you will identify on these sheets that it is extremely busy. So what we are going to do is we are first going to look at our subsidiary. Secondly, we will look at our JVs and our associates, our joint operation, and then we will look at the complete set of notes. Before we do this, you will identify that I have made use of certain colors. When you refer to your left-hand side, the investment in associate JV, you will identify that I have used purple. When you refer to the joint operation, the orange. When you refer to goodwill, guys, the pink block. Before we look at our subsidiary, I want us to please refer to the timeline. Now guys, you will remember timelines extremely important. At the top, include your separate financials accounting policy, and at the bottom, your group financials accounting policy. Now, why do I do this? Remember, when you need to prepare your group financials, there will be certain transactions recognized by our separate financials, our parent, that we now need to reverse in our group. Now I want you to refer to the green block. When we refer to our separate financials of our parent or our investor, IS 27 indicates to us that the parent can choose to account for the investment in a subsidiary, associate, or joint venture, either at cost in terms of IFRS 9 or equity method. Remember, if this is in terms of IFRS 9 and fair value through OCI, there will be a mark to market reserve in your statement of changes in equity, and the tax will be based on your CGT rate. Now you will identify that I have included a block that states your joint operation will not be included. Why not, guys? In terms of IFRS 11, the joint operation percentage recognized in our separate financials of our joint operator. Now guys, when the requirement indicates that you need to prepare the statement of financial position, what is your first step? Include 1, your structure to ensure that you understand who is the parent, the investor, subsidiary, and so forth. Second step, include your timeline to ensure that you understand the flow of the transactions and identify all of the important journals. Third step, include your template of your statement of financial position. Number 4, your analysis of owner's equity. Now guys, remember, the analysis of owner's equity is purely for calculation purposes. Therefore, if you make use of an analysis, you need to ensure that you understand your analysis of owner's equity. And guys, please ensure that you identify if it is necessary to do this. There might be certain instances where you don't actually use a lot of the information on the analysis. Therefore, you need to determine from a timing point of view if this will be necessary. However, if this is what you're going to do and you always want to use the analysis of owner's equity, you need to speed right. Remember, this is only a calculation. If the requirement indicates that you need to prepare the statement of financial position, but you did not transfer your calculations to your statement of financial position, your marker will not mark the calculations. Why not? The requirement is not to prepare calculations. The requirement was to prepare statement of financial position. Therefore, ensure that you read and that you answer the question. Then when you use the analysis or when you include any other calculations, guys, ensure that your marker is able to see where you have included that amount. Therefore, make use of referencing. For example, A. When you transfer this to your statement of financial position, use A or highlight for your marker to be able to see. I want us to refer to only the parent and the subsidiary section. In your non-current assets, you will identify there's a line item goodwill. This goodwill relates to your parent. Now, when will we recognize the goodwill? This will be at our elimination journal, and this will be brought into your financials through a journal entry. They can provide you with a sentence that there is impairment on goodwill, and your journal entry will be to credit your goodwill as this is an asset that decreased, and to debit other expenses in your profit and loss. Now, when you look at only the parent column, we have included an investment in the subsidiary. Remember guys, this amount will be recognized in terms of IS 27, either at cost, IFRS 9 investment, or equity method. Therefore, when you include your elimination journal, this should now be 0 in our group. Guys, do you see in our group I've included that this will be 0? And you need to be able to explain why this is 0. Remember, we consolidate in our group. Therefore, we add 100% of our parent plus 100% of our subsidiary. If we add 100% of our subsidiary, we add assets minus liabilities, and this will be equity. Therefore, do you agree with me if we include an investment line item in our subsidiary that we are actually double counting, we're overstating? Okay, therefore we will have to take this out. Then when you move down and you look at our equity and liabilities section, we have share capital. Now guys, again important, this will only be your parent's portion of share capital in your group. Therefore, you see I have included this as green 90,000. Remember, this is only an extract. I did not provide you with information. This is only an extract, and I have included amounts randomly, guys, to indicate to you that the amounts should agree. You need to know that this will only be the parent's portion, and that this will be eliminated in our elimination journal without subsidiary. 2 lines down, there is mark-to-market reserve. Guys, again, this will be when we have financial assets carried at fair value through OCI. Okay, now this is where it is very important that you understand. Remember, guys, that in your separate entity, the parent, you can have your mark-to-market reserve. If the accounting policy differs in your group, you will take it out via a journal entry. But once there is changes in ownership, there can be mark-to-market reserves in our group as well. Then below the mark-to-market reserve, I've included other components of equity. This will be, for example, your revaluation surplus, your change in ownership, and so forth. Guys, please do not include other components of equity line item in your statement of financial position. Remember, this is only an extract. You need to include the columns as per your statement of changes in equity. And then extremely important, that the totals that you include in your statement of changes in equity and in your statement of financial position, this section, guys, should equal to your statement of changes in equity total of your columns. You will identify if we have a subsidiary that there will be a non-controlling interest, and this is our blue section. Remember, our NCI increase on the credit side and decrease on the debit side. This total here, guys, this blue total that I've included, let's say for example this is 100,000. This should agree to your analysis of owner's equity NCI total at the end. Now I want to indicate to you this on the analysis of owner's equity. Remember, we are only looking at the subsidiary section. Guys, this is a template only of the analysis of owner's equity. Now when we look at our NCI column, the blue, the total at the bottom, the light blue, let's include 100,000. This should agree to your line in your statement of financial position. And guys, you will remember that I've indicated that we need to show our marker where you've calculated this. Therefore, I will call this, for example, A. And in my statement of financial position, I will indicate analysis of owner's equity A for my market to be able to follow. The 100,000 is exactly the same as the 100,000 in my analysis of owner's equity. Now guys, this is exam technique. Remember, you need to make it easy for the market to see. Now when you look at your statement of financial position, below your NCI, this will only be our total equity. Guys, please don't waste time in an exam and calculate total equity and so forth. Guys, if you are running out of time, remember, this is exam technique. My recommendation, include a column for your parent, include a column for your subsidiary, include a column for your journals. Remember, this should be a big section. Why? There might be quite a lot of intra-group journals. And then when you are running out of time, the last few minutes, quickly include totals. Even if you do not actually calculate them, guys, the marker is not going to test if you are able to use your calculator. I'm sure on a third year level or on a CTA level that you are able to use your calculator. Okay, so don't waste your time by recalculating everything and including quite a lot of totals and so forth. Just include equal 100,000, equal 20,000, equal 225,000, or whatever that is. You need to work effectively. We have a non-current liabilities section, current liabilities, and total equity and liabilities.